Welkom in deze video guys, en voordat we beginnen, weet dat met investeren het risico van verlies komt. Wij zijn geen financieel adviseurs. Cryptocurrency specifiek is super volatiel, dat betekent dat de prijzen heel snel omhoog, maar ook heel snel naar beneden kunnen gaan. Zelfs wij kunnen het fout hebben, ook wij kunnen geld verliezen. Dus denk altijd 2 keer na, doe je eigen onderzoek en weet dat wij er voor de lange termijn in zitten en dat je dus niet morgen rijk kan zijn. Met dat gezegd hebbende, heel veel kijkplezier. Like de video en dan zien we jullie zo. Nieuwe woensdag, nieuwe podcast.
And we're back.
Vandaag hebben we een hele speciale gast, namelijk Curk.
Correct. Welcome.
Curk, right?
Yeah, correct.
Yeah, very nice. Okay, the CEO of Economy, a crypto exchange in the Netherlands. You are our first international guest, so Dutch viewers, I'm sorry, but step up your game.
Learn English.
Yeah. Perhaps we'll do, maybe we'll do AI, and then you start speaking Dutch.
Okay. Good luck.
Anyway, Peter, could you tell me something about yourself? Who are you and how did you get involved in the crypto business?
Yeah, hi everybody. Peter, Curk, as it's pronounced in English. I'm not going to explain it how it's in original. Yeah, I got involved in crypto back in 2016. A friend of mine just started talking about it, Bitcoin at the time. So it's been quite some years, I would say. Professionally, in terms of business, I'm CEO of Economy now for 3 years. And I was basically invited to join the company to try to scale it up. Economy is actually headquartered in London. So we are registered with the FCA there, and we do our business in crypto business in London as well. We now acquired the company in the Netherlands last year, December. And we launched our services in the Netherlands as well. So I run together with the team of very, very close collaborators, like 2 businesses actually. So one for the UK market and one for the Dutch market.
Yeah, that was my question. And maybe it's a bit of a boring subject, but the compliance thing is different because the MiCA is for Europe, no?
Yeah, MiCA is for Europe, but I think some of the things that MiCA introduces in the Netherlands and in the European market only next year, have been already in place in the UK. For example, the travel rule, like we monitor transactions and comply with that internationally, and already today on our platform, the Dutch company, we do that as well. We do it in the UK for more than 2 years or 1.5 years. So for us, certain things that are only now stepping in the regulations with MiCA in the European market, we've been already doing that in the UK. The UK is quite a different market. It's also more strict and regulated in terms of financial promotions. So if I would make a joke, I could say that the level of marketing promotions that we can run in the Netherlands are Disneyland compared to what we can do in the UK.
Yeah.
Okay.
That's actually a good thing then, right? So it's more easy to grow in Europe, I would say.
Yeah, I mean, the competition is also maybe higher, so it's never an easy job.
Yeah,
that
makes sense.
has to be said. But I think it's more pragmatic here, the approach, and I actually think it's better because the market in the UK is very, very wholesale, B2B oriented, I would say, while the retail users are deprived of some offers that you could get in the Netherlands or other places on this beautiful planet of ours.
All right, and for the viewers at home, there are so many crypto exchanges already, you know. Everyone has a few accounts. I have 4 or 5 myself. It's divided over them, and some I use for these kind of things and some I use for other things. Personally, I've worked at Finst. I'm not sure if you know it. It's one based in Amsterdam. And I loved so many things about the features. So I want to ask you, what makes your exchange different? And also I want to be very critical, of course, and see how you look at certain things. So how would you explain Economy to...
So first of all, we are not an exchange. Yeah, we are not an exchange. So we are basically an investment platform. So we have developed and we connect with multiple exchanges and other trading platforms, and we have a very sophisticated way of discovering the best price. This is one of the things which we do for the clients. For example, when somebody wants to sell something on our platform, what we actually do is we check where is the best to buy it at this specific moment.
So multiple liquidity pools.
Exactly.
All right, cool.
Exactly. That's one thing. This has different I would say, advantages. First of all, is best price discovery, which at all time we remain independent. The process is fully automated. We don't steer any order to a specific trading platform just because, I don't know, these guys would be offering us some kickbacks or stuff like this, and there are exchanges approaching us and trying to do that. We simply let the algorithms work and decide where to do the trades. The second advantage with this is also that we have backup options, and all the tokens that we offer in our strategies, as we call them, or to just buy directly, have multiple liquidity venues. So meaning a token, so basically investors cannot be stuck with a token that they cannot sell. Because if a token is not listed on more than 2 exchanges or trading platforms, we don't list it. So we always have a first, second, and a third option to how to sell a token. And we monitor the liquidity in all those exchanges, and we protect the investors in a way that if we see that the liquidity on one exchange is drawing up, and then on the second exchange something starts happening, we proactively basically delete the token, convert it to Bitcoin, and give the Bitcoins to the investors without the investors having to do anything, because we monitor the liquidity. Nowadays, this is not an issue. Because the markets are high, the liquidity is there.
Everywhere.
Yeah, basically almost everywhere. But still, let me put it like this: in bear market time, when the liquidity dries up, certain tokens get so illiquid that people could really get stuck with tokens that they don't want to hold. So that's what we do for the investors. And the third thing, before I go to the fourth, is that we basically work with multiple partners, are also sub-custodians. So the assets that we store on our platform are never in one pool. They're always divided in separate pools. So even if we would get hacked or something worse would happen, there's no way that all the assets get drained out of our platform.
So
there's also security. Exactly. And the fourth thing is that we actually don't stimulate people to trade. We stimulate them to make mid to long-term investment in crypto and try to give them the tools. And I think we've done a good job how to really manage crypto as an investment, not as a second job. I spoke before the starting of this podcast. Usually retail people really start and they think, I'm a good trader. It's coming from the forex trading and then the stock trading. And all this, the whole industry has been doing the last 20 years, is been convincing everybody that he can be a good trader. But this is like putting money in, first of all, to get a second job, because then you have to follow the market, you have to do the research and all this stuff. And another thing is, mostly people are not educated or also not mentally prepared to bear and make the right decision in moments of stress.
Very true.
So we're not an exchange, we're an investment platform. You don't get a second job and spend hours and hours managing your crypto. You simply invest with us and then follow what's happening with with these investment strategies that we offer, because these strategies basically diversify your crypto. And actually, coming back to what you said, what we do is we basically solve the issue that you have having multiple keys, multiple exchanges. It's already inbuilt in the way the platform works.
I do have a question though, because don't quote me on the exact data and numbers, but isn't it the case that most altcoins, like 80% of them are worth less in a period of five years?
Yeah, I mean, altcoins have very big swings, the answer, I think the most fair answer to your question would be depending on when you entered the market.
Of course, yeah.
So the altcoins, I think we currently list 150 tokens on the platform. So we cut all the crap that's below 150 in terms of compliance, liquidity, and availability of the tokens. And we offer only the tokens that we think have a minimum or pass a minimum threshold. So what are the altcoins? So I guess we cut 99% of all the altcoins, consider how many tokens there are out there. So the tokens that are on the platform are really the ones that kind of we think on the mid to long term will survive. And if we start seeing some weaknesses in there, just delete them. Yeah.
Okay.
So coming back to the price of the altcoins, it's really tough to say. But if I would look at the top 20 in terms of market cap, I think half of them was not there 5 years ago. Not only the altcoins. I'm talking about the top 20 tokens.
So there's a lot of new tokens as well. But at the same time, it's made for the, if I make an assumption, it's made for the people at home that do want to get involved in crypto, do not want to take too much risk, but at the same time go along with the markets and they see there's an opportunity there, right?
Correct, yeah. So we offer different types of, so users can buy just the coins if they've done their own research. But the things which is really cool is that we offer these diversified portfolios. We call them strategies. There are like the most successful strategies on mid to long term proved out to be the indexing strategies. So you come in, buy a portfolio, and this portfolio then automatically rebalances and follows and index the market. You can index the whole of the market, a sub-segment of the market, DeFi, gaming, I don't know, you can go thematic. There are also risk-adjusted portfolios and so on. So this is the most valuable part of the platform because it totally automatically basically does this for you without you to having and spend time on researching the tokens, because we do the job for the users and we also then execute at best prices.
That's very nice actually. A lot of the things you mentioned Vince does as well, and that's the reason I love the platform. How do you guys, do you have proof of reserves?
No, actually it was a big fad. I mean, there was a big discussion about this, I think, after FTX crash. So let me go back to the history of the economy. I think we were the first crypto project or company on the planet to do a third-party audit of the proof of reserve done with a Merkle tree. This was back in 2018. So I think Kraken was the first that did that. And then we did it as well, but we audited it from an external partner. And this was back in 2018. And what we learned there is that it's very easy to demonstrate how many assets you have under your control. But what you cannot, and the auditors will never confirm, is what are the liabilities of the company. Because to confirm that, the auditors would have to audit not the bank statements, and they would have to audit the processes and how a company is run. And that's why the International Association of Auditors has stated that there's no standard for doing this. And that's why nobody today, no auditor will come in and say, we claim that this is correct. Yeah, you can only prove one side of the balance sheet. So either how much assets you hold, but you can never prove the other side. Okay, how much assets you basically owe to your investors. Yeah, and that's why the proof of reserve was a kind of, I think, if I'm really sincere, it's a fake proof of reserve. It's also usually done only in snapshots, meaning in a certain point in time. But if I just cut it short, we don't do that. We rather have a setup, first of all, a legal setup, which keeps all the assets that we hold legally separated in case of anything would happen with the company. And then also operationally separated, which was something we done from the inception date. So meaning there are accounts for what it's our money, and there is accounts for what's customers' money. Yeah.
And what's on the roadmap for Economy? Is there something you're working on right now that will come to the future? Will you ever enable the platform for traders as well, for example?
I mean, it's not that it's not enabled for traders. For example, we have a very powerful API. You can automate all of your trading if you're really advanced and you want to go into it. We actually also have a B2B for financial advisors portal and more advanced stuff. But for the usual Joe walking on the street, he can also buy maybe a feature to mention, which I think the retail investors don't really appreciate, because maybe they are not so knowledgeable how this whole thing works, as this algorithmic execution. So when we execute orders, So basically, when somebody buys or sells anything through us, we never place a market order. So because the market order, what happens, you always cross the other side in the order book, and so it's you paying the spread. Yeah, that doesn't happen with us. We have algorithmic execution of all the orders, and we only place limit orders on exchanges and trading platforms, which means if somebody is offering a certain, I don't know, whatever token at a price, we come to be the first in on the other side, but then we wait for the other for the offer or the other
buyer
party.
or offer.
Yeah, so to move across, so this way. So, and this algorithmic execution, which we have different algorithms, you can have a slow one, a fast one, depending on how fast you want to be trading. I actually used can be used by any user. They can be even used through the API. It really enables you to buy at the best price, at least if you are an advanced user and you know a bit where is the market? Is the market going in the right direction? Is it going against me? And stuff like this. Yeah. So, and there are very powerful rules also for setting the structure of your portfolio, automating, time rebalancing, rebalancing against a single coin. So the whole portfolio against, for example, you can manage your portfolio against ETH instead of euro. Yeah, you just say, for example, okay, I think ETH is my lead currency. I'm gonna manage everything else against ETH. So I want to, because on long term I want to accumulate ETH. For example, if this is your, just trying to say that the platform is fully packed with this kind of features. Which is why we also developed a B2B then offering. We have economy private for high net worth individuals. We have financial advisors portal, which is called, and wealth managers actually, which is called Economy Wealth. But coming back to the average Joe retail investor, they usually don't appreciate this. What they want to know is how much am I paying, and is it easy to use, and I guess is it safe?
Yeah, exactly.
Maybe coming back also, if I may, to the price. Yeah. There's so much confusion in the market about how much does a Bitcoin cost, and what people. I mean, if we talk about Bitcoin, it's still, I guess, very little price differences. Because the markets are so liquid, and they're so interconnected nowadays. But back in 2016, 17, when we started developing the platform, this is also why it's technically developed like it is, that we connect with multiple events, we see the arbitrage options that are there. And then when you go to the altcoins, there are still these price differences sometimes. And for example, I did once for a joke a comparison, a mobile app, I'm not going to name it, and we clicked on our app and on their app, the same order, the same moment, and we just clicked. And at the end, I think it was like more than 9% difference, so better price executed on our platform. I'm talking price after the fees. Because one thing is how much is the fee, but the most important thing, let's say the fee is 1%. But then if the fee is paid on 120 basis, that means you're going to pay €1.50. If it's the price you're paying is 100, you're just going to pay €1. So you're 20% better off just because the base price that you managed to achieve is lower. And then there's this confusion about spread and the fees. We charge no spread, for example, and some other platforms, they charge you a fee and then a spread, and then, I don't know, whatever. Just trying to say that retail users are not aware of this. We try to keep it simple. We have a simple fee structure, and that's everything that the people pay. Everything else there's no charges.
So what is the fee? What is the fee structure then? Is it a flat fee or is it a?
No, we charge. So if you manage your portfolio in a strategy, the fee is 0.37% for trading that. Yeah, I think it's reasonable, especially considered that with the algorithmic execution and everything, you also get a lower base price, because I think we achieved that with those.
You said 0?
37%.
37, okay.
Yeah.
But it's a bit more than most platforms charge, right?
Yeah, because we are not, I would not say, if I would go and compare it with, for example, investment platforms and brokers, I think we are on the cheap side.
Cool. Because it's not a trading platform.
Exactly. If you would go to an exchange, you might have cheaper prices, but exchanges serve a different segment of the market as well. Yeah, I actually spoke with a Swiss bank. I think they have trillions of crypto under management, and when I disclosed the amount of fees, they said, "Oh, you're so cheap." I was like, "What? How can we be cheap?" Yeah, I said, and then they started explaining how much fees they charge on a B2B relationship in the back end. And I was like,
with the management fees and all that.
And all this, and everybody takes a bit of in the chain, everybody takes a bit, and then at the end, the guy that at the end says, "No, I'm just charging you, I don't know, 0.5%. Yeah, man, but you are buying through 3 intermediaries that everybody in the chains charges that a bit. While with us, we are directly connected. There's no intermediaries. There's the exchange. There's us. And we just charge this.
But this is for these strategies you said. So is there a different fee for regular trades or
if you
spot
would
orders,
just buy a single coin or something, we charge 0.5%.
Okay.
This is because we want to actually stimulate people to go into and manage all their crypto as a portfolio, not as buying single coins. Yeah, because it's just the way we want people to use the platform.
And so let's
there's
say
also let me explain. There's also a psychological reason why we want this, because if people start investing in terms of the percentages, it takes a bit of this fears and hype away, because you are not managing absolute figures how it went up and down, but you look at the portfolio as a whole. And then you start thinking in percentage. Oh, I have 20% in Bitcoin, and I have, I don't know, X% in something else. And then you understand the whole crypto portfolio that you have. Oh, yeah, maybe I'm too exposed to altcoins. I'm going to decrease the exposure to altcoins in percentages compared, and so on. And this has, we believe this has also some good consequences, because people are less emotional then. Whatever. Might be different for different people, but...
I have a follow-up question. So you're talking about the strategies, right? Rebalancing is included in that, or does it charge a separate fee for the rebalancing? So it's included. And the strategies, because we took a quick look on the website, but it said something about creating your own strategies. So the strategies are basically the indexes, baskets, whatever, bundles, whatever you want to call them.
Also actively, discretionarily picked coins, whatever,
Could, for example, we as creators create our own strategy and make people copy trade the strategy?
Good one. I actually invite you to do this. Yeah, you could. Not you could. You can. You go on there, create your strategy, and then publish it as a public strategy. And then what you could do is set your fee for other copying you.
Very interesting.
And
you have it up and running as well.
Sorry?
You have it up and running already.
Yeah, that's called copy
cool
trading. And then you set your own fee. For example, you would say, "Oh, I want 1%," and so anybody investing in your strategy on the platform would be paying you 1% annually, but it's your fee. Yeah, and we take a revenue share for that. But let me, you've opened a very interesting point, because usually when we speak with, let me say, people like you, meaning content creators, they usually never go and do it. That's why I have a challenge for you guys. And let me also explain why.
They are afraid to burn their name, probably.
Yeah, I mean, it's easy to be...
they don't put their money where their mouth is,
basically. Exactly. So one of the features on the platform is, we call it skin in the game. So if you want to have a public strategy that others can copy, you have to have your money in the strategy.
Of course.
Called skin in the game.
Interesting.
You cannot go public without skin in the game.
Of course,
It's a minimum requirement.
And what defines skin in the game? Is it like $100? Do you need 10K? Or what is?
It's rather around 5K.
Okay, interesting. Another question.
Let me come back.
Sorry, because now you activated me.
No, I think
we're going to jump on it. Everybody's going to jump on it.
No, but you touched the point, because so far what we've seen from content creators, if I call them so, is that they're full of
Wawa, we call it Wawa.
You can
full
say
of Wawa. Until we don't invite them to, yeah, cool, create your strategy, man. Go public. Yeah, do the trades. Because usually, you know, it's easy to just create content about the good trades and hide,
of course,
and
Very true.
hide the losses, that you create. This is why I would say 95% of content creators never do their public strategy. Because, you know, everybody can have one good trade, two good trades, I know, one good trade per month, whatever. But on our platform, all the trades got publicly, and you can transparently see all the performance. And you can see, are you doing better than the market is doing? Would it be, are you underperforming the other traders?
Can you see the benchmarks as well?
Of course, you can compare,
everything.
you can
Transparent.
compare any strategy with Bitcoin, ETH, or with any other strategy on the platform.
Then I do have one question, because I actually last week I had a Monday actually this week. I had a conversation with how you say, like a fund manager, you know, and we were talking about doing one in England actually. I think the company was called Pelican or something, and they were talking about a pen structure, blah blah blah. So people could actually do like a copy trading thing, because it's actually interesting to have like a retail fund where people can basically copy the trades. However,
these are not funds. Let me be very clear.
Yes.
Because
this is like a copy trading.
You always
right?
buy, it's copy trading. You always buy the assets, the portfolio of assets.
So the question, because we kind of ran into the problem that, for example, I had to keep trading, but it's hard if I already purchased my coins now, and you enter the strategy, you have a different price than me. So I might not be buying at the point where you start to follow the portfolio. Do you follow me? So how does it work? Let's say we create a Bitcoining strategy, right? And a follow-up question is that we invest in a lot of coins you exclude from the platform, so lower market cap coins, and you only have 150 coins listed. So a question for after. But for right now, let's say we did create a average Joe mid-long-term strategy, right? In projects we believe will, at least for in 2025, increase in value, because that's basically the main selling point of the platform, right? Let's say we do that. What happens, for example, we put skin in the game, we enter 5K in the platform, we buy a certain amount of coins. Let's say it's not the coins we will do, but let's say Bitcoin, Ethereum, XRP, just for the example. You or Ian enters 2 months later. We already purchased those coins. How does it work for the strategy, and how does it, what happens?
This is one of the problems we also try to solve for the user. So, first of all, by educating them with the blogs and the content we put out, but when it's too late, it's too late. What you're talking about is timing the market. It's impossible to time the market. So you would really have to be very, very good if you want to do that. So this is why there are different strategies on the platform, and when people come to the platform, should select the appropriate strategy. And it's impossible to turn time back and say, oh yeah, and because you already have the returns in your case. So the key question is, why would you keep holding on to those 3 coins if they don't have further growth potential? Why don't you cash in the profits? That's what I'm asking. Good. So I was coming to the taking profits, which is really important thing. We discussed as well before recording. So most investors, especially, I guess in all asset classes, they forget to set their own take profit rules. Kind of, I think the stop losses, people are more aware of the stop losses, or they might misuse them in certain situations, especially in the crypto markets, which is very volatile. People might have too narrow stop losses, but I believe that even more important than the stop losses is the taking profit rules. Let me explain. So when we say money makes money, for me this would mean I have money, and each month, or let's say each week, whatever, I get some money out of it. But the important thing is getting the money out of it. not keeping it in. So, and this is a very, very key feature set of the platform. So I was explaining before that there are rules about how to manage and automate the managing of the portfolio and your strategy and stuff. But separate to that, everybody, all users, also the users that don't have strategies, just copy other strategies, they can set, we call them smart rules. And the smart rules are about DCA in and DCA out, so the taking profit. And I would actually invite everybody to just create these rules, especially the take profit rules, before they put a first euro into any platform.
Okay.
Because when things get rough and the charts start going up and down, we all get emotional and make irrational decisions. For example, one of the simplest rules you can set for yourself would be, okay, if it goes on 10% up, I'm going to take 20% of this 10, so meaning 2%, out. And I'm going to take that out to euros. Yeah? And then wait and see and make a rational decision. Oh, would I now be buying again the same strategy with those 2 euros, which already are my profit? If you don't sell, you don't make profit. Everything is virtual until you don't sell. And this is what the retail investors usually don't do right, because they think they will be able to time the market, so they try to enter the market in one point instead of maybe having a DCA in a bit and then getting the average price right, and also then the taking profits, which is missing.
Then I do still have a question, because I may be perhaps a bit of a strange trader, but I base my taking profits based on date. So not necessarily on price, because in crypto especially, you don't know, well, yeah, it might go parabolic, right, for some certain coins. So in my mind, it could be a waste to take profit at a 100%, 200%, whatever you see the craziest things happening in crypto. But I do want to exit or take 20% profits in, let's say, end of April, starting of May. And then later, August, October, November, taking out more profits. Is this possible with the smart ruling as well? Or?
Of course, this would be simple time-based rules. Yeah,
so cool.
You set rules, and based on time, you can do it weekly, monthly, quarterly. You just set how, based on time. Yeah, the rules. What I'm trying, but because maybe you also know the market a bit better than the average person, so you know the seasonality during the year, because this is what you're talking is about the market seasonality
as well, and the cycles, of course.
And then there's below that, because you spoke about the 1 year time frame, there's the 4 year cycle. So all these things come into, and I believe that a very wise investor would have cycle rules, yearly rules, and then single asset rules. And all these kind of rules can be automated on the platform.
No, and could you go advanced and combine like Bitcoin dominance to the picture as well?
Yeah, I think you would have to calculate that outside of the platform, but then you could then do it.
Okay.
But all this that you are talking about is in a way already solved by the various strategies on the platform.
Okay.
Because if we simplify what the strategy does, it rebalances to its intended structure every, I don't know, 30 days, let's say. Let's assume it's a very simple indexing strategy. For example, we have blockchain index, which is indexing the market for now, let me calculate, let's say 7 years. It's made in those 7 years more than 9,000% of profit. And it's simply every 30 days, it automatically rebalances based on a certain predefined strategies of way of indexing the market. And it does this automatically. And what does this mean to rebalance? It simply means to sell the coins that went up, take that money out, and buy the coins that went down. So the structure always reflects the intended structure. So what I'm trying to say is that a part of what you were asking is already done by the strategies themselves. Then you can start applying. So depending on which kind of user you are. So if you are an advanced user, you will create your portfolio, you will start creating these rules, And Stefan, if you can program and use Python or something, you can even use the API to do that.
Okay.
But if you are more easy, or like an investor, which I think the platform is really suitable for, like somebody approaching crypto, knowing has already invested in other asset classes, but not really want to delve into the rabbit hole of analyzing, spending time, and you just find the right strategy and then go with it. Yeah, and then you create your rules about taking profits out of the strategy that you created. And that's what I think for retail investors is the most important thing.
Yeah, interesting. And you have to put in 5K per strategy you want to publicly launch.
Yeah, if you're going to go into managing strategies.
Yeah. And you say publicly because you can create private strategies just for yourself, I imagine.
Of course. There are actually more private strategies, many more private strategies on the platform than the ones that the people see.
Interesting.
The copy, strategy copy trading or copy investing is actually just a small part of the platform. Most of the users come to the platform, they create their private strategy, maybe they invite a friend or a family into it, so they kind of become the family crypto expert, stuff like this. They do this free of charge, of course, no fees and everything, and they stay private. They just manage their investments there, and yeah, that's it. But again, if you think of it, it's like almost getting a second job, because if you want to get good at it,
of course,
you have to again spend time. This is why the copy investing model, what the copy investing model solves is like, oh, somebody else is doing this for me. Economy is monitoring it, is trading, and creating a safe environment to do this. And you invest just with a certain strategy, which is explained, defined. You can understand how it works. If we do a parallel with, I don't know, for example, with the ETFs, if we would go, usually the ETFs, usually you would buy and go with a broad market ETF. So if you're a crypto believer, what you would do is you would say, okay, the market is going to go up. I believe in 3, 4, 5, 10 years, the market is going to go up. So what I want to do is I want to be in the market, in this market as a whole, and then you go and you would buy a broad index kind of ETF. It would be the stocks, or blockchain index in our case, if it would be the crypto market. And then it just goes. And then you would say, okay, but this is the broad market stuff, and then I'm going to pick, I don't know, I believe in DeFi. I'm going to buy a strategy that just follows an index, the DeFi. And all these strategies are diversified, so they automatically track certain tokens in the DeFi space or in the broad market space, and then automatically reallocate, sell profits of the newcomers. If I say like this, I guess 50% is the same as we spoke at the beginning. Like 50% of the tokens that currently are in certain indexes, they were not even there like 5 years ago. And this is the simplification that the platform uses.
But because you only have 150 coins right now, which is not low, but at the same time there are platforms with more coins. For example, let's say you want to have an AI strategy or a real-world asset strategies. Most of these tokens are below the demands you have for the coin, right? They are probably a bit less liquid, they have lower market caps, but at the same time that's a lot of the coins we talk about because they have so much upside potential, of course more risk, and we understand what comes with it, but is there a way to still get exposure on that somehow?
Not with us, because I'm not, let me say, I don't think we should get too emotional about this stuff, meaning when somebody says, oh, I'm going to invest in AI or I'm going to invest in gaming tokens. So it can be either because you are a gamer, you have fun. It's like, I'm going to buy, I don't know, red cars. And why it's red? I like red. That's it. But there's no rationality behind it, because at the end of the day, what you want to be doing is, I want to be making money with my money. And why would I go into a specific segment, not in a broader strategy? So what I'm trying to say is that to come to the conclusion that a certain segment of the market will outperform, you already have to do your homework. You already have to go into it. You already have to do the research.
But we are doing that as creators, right?
Yeah, yeah, correct. If you are doing that, there's another reason. Second reason would be that I could say is that the slippage and the liquidity stuff, yeah? If you manage your portfolio, which can be relatively low in a certain volume amount, so the biggest strategies on our platform have already like, I don't know, I think it has 20 million or around 20 millions in it. When you start trading on certain volumes, then the liquidity has to increase, because then this is the only way you can protect the investors. You know? So the altcoins, the altcoins that you mentioned,
the small caps.
These are not for the average Joe. I would advise people to do their own research and so on. It is also true that we list new tokens all the time, and we also delist tokens all the time. So, yeah.
Okay, interesting. You have questions, Ian?
Yeah, I do have some questions about economy. Sounds like a very advanced app, automated. You guys are using AI and stuff like that. How does a company make money?
It's basically the fees that we charge to the users. We thank you for them. And thanks for the trust that they've shown us throughout the last 8 years.
Liquidity makes the price, right?
Yeah, I think it's all about liquidity. It's all about, there must be somebody buying if you want to sell.
Yeah.
Otherwise you're stuck with a token that has no value. It has a value on a screen, but you start selling
You can cash out.
You can start selling the token, and then the slippage is so high that actually the actual price when you sold it compared to what was shown on the exchange price is like crazy. I remember 2022, I was looking at an exchange charts, you know, this like the bar charts, and I was like, oh, there's a bug in the app. And then after a couple of minutes, no, it's not a bug. There's no offer, and so there was no bars on an altcoin. I mean, the liquidity was so low.
So no one was selling or no one was buying?
I don't know. I know
neither of both.
Yeah, neither of both, I think, because there was no charts.
Okay.
So there was no offering for that, or it was, there were like minutes.
Yeah, where it's the chart stayed flat.
Yeah, it was just empty screen, and then there was something happened, and at the beginning I thought there was a bug in the app to displaying stuff, but no, it was
There's no liquidity.
Yeah,
Xborg had it also. Xborg in the beginning, it was like lagging. Like if you put it on a 1 minute chart, you see no handling or no trading happen. But that's the risky with the new coins and DeFi and such.
Correct. And this is what basically we simply set the threshold for the coins to be listed so high that we not only have one exchange to trade with liquidity, we have to have 2 exchanges with enough liquidity. If the liquidity on a certain exchange is too low, or 2 exchanges is too low, then we require a third exchange, you know. I think we just delisted a token, I guess one token, I remember a token was delisted end of last week.
So what happens if it's delist? Do I have like 2 weeks, 2 months before I take my funds out?
No. What we do to protect the users is we simply see that there are 2 procedures in place. Actually, one is called soft, and the other one is a hard delisting. The soft delisting means we don't allow users to buy the token anymore. So whatever they bought, it's capped. But then we start observing how and what's going to happen with this token. And then then the situation can deteriorate, and we say, okay, now we are going to hard delist it. This means that the platform automatically sells the token to Bitcoin and returns the users the appropriate value of the Bitcoin. And that's it. So this was a scenario that first goes to basically soft delisting, meaning you cannot buy it anymore, but you hold on the platform. And then if it really gets dramatic or like almost critical, we just sell it to Bitcoin, and then the token is not present on the platform anymore. And it can also go very fast, so it goes directly to hard delisting. But so that's again part of the protecting the investors, so that basically we don't slip but they sleep well.
Yeah.
Yeah.
No, it sounds very interesting economy. Give us one more reason why when we're done with this, I have to download the app ASAP.
What do you mean by one more reason?
Because you said a lot of reasons to download the app, but what makes it stand out, differ from the rest? Why?
Because you have to imagine, most of the viewers right now, they don't have economy app yet,
Yes.
because
Okay.
you're one of the lesser known platforms in the
Okay,
Netherlands
thanks.
at this point. What would you say to convince them to download now?
Maybe I'll go back to something that a customer of ours reported in I think it was on a review site, and I read, and it was like, yeah, economy is a cool project, and then he listed the reasons, and then one of them was they are not into this FOMO game about pushing like buy this because it went out, you're going to be late. So as I said, we are a mid to long-term investors platform. And I actually believe that we are here to help users make money out of their money. So, I don't know, that's it.
If you believe in crypto, you believe in economy.
Yeah,
This is the way. Economy is the way.
That I can fully agree.
Okay, then I think we've covered a lot about the platform. What are your personal views about crypto? What do you think, where will Bitcoin go? What are your expectations? Because there's a lot happening right now in the world, no?
Yeah, maybe good to share. So the type of investor I am, so people will be able to put in context what I'd be saying.
High frequency trader.
Sorry?
No, the complete opposite of your platform, High frequency trader, just no.
Buy high, sell low.
I'm actually quite a conservative investor myself. So I hold a lot of in real estate and then complement this with crypto. I think this combination is a good combination because crypto has the reward potential, volatility. Real estate is a more slow and steady asset. Steady, not necessarily, but let's say a slow-moving asset class. Of course, I've invested in all sorts of instruments and assets like shares, bonds, ETFs, and stuff like this. So this for the context, So about what the market... I think Bitcoin crossed the Rubicon. So with the ETF story in the US, it basically became from being, let's say, also we could call it like part of a subculture because it's the roots are in the anarchic movements and all this geek stuff and so on. It just really becoming part of the traditional finance system with the ETFs in the US. Not sure, quite believer that this is irreversible, and over the next years it could reach the market capitalization of gold. I don't know where the price is going to be at which point in time, but I believe this is the trajectory. It has very small little features, let's call them features, that are very peculiar, very singular to any other asset class. So that's Bitcoin, and it's a class of its own. Everything else, it has to be taken with already a bit more care. So I think Ethereum is one of the rare networks that is currently yielding something to the network and the ecosystem, so it has positive yields overall. All the other projects, I think, should be looked at as being a startup, meaning they are actually running a minus. They're losing cash overall, but they have a huge potential for the future. So, as they say, there's Bitcoin, there's ETH, so the king and the queen, and there's everything else. I think instead of sharing my own beliefs, I'm going to share what we put in the business plan. We believe that there's like a very high probability of having kind of a bull run in this period.
Aren't we in a bull run already?
Hard to say what is a bull run. I think so far, it could be an initial phase of it. The key moment would be if ETH is going to break the all-time high, and so on. But yeah, we see many signals, characteristic of a bull run. I'm not sure if it's going to last more than mid of next year, because summer is always everybody gets relaxed during summer. People don't look so much. They take the time to spend it with, I don't know, families, hobbies, and outside. So it's this period from, you know, the happy December thing to middle of next year that we see really potential for the market. And you know, there's the election stories still to unfold. So an inauguration of Trump.
Yeah, the Trump effect.
Yeah, exactly. So that's one thing.
The reserves, Bitcoin reserves, of course.
That's another narrative. And then on
Do you believe it will happen? A strategic Bitcoin reserve for countries?
Let me think about this. I would look at it more as an alternative or lost opportunity at the moment. If we look back in history, also gold was at a certain point prohibited. So whenever people...
Really?
Yeah, whenever people wanted to do something outside of the system actually imposed rules and prohibitions.
Yeah,
and this was imposed in different historical...
Yeah, gold was different, no? It's very different times, set of rules, set of people.
Let me just elaborate what I mean. So the issue is not holding Bitcoin or having 100 years ago gold in your pocket. You could have it in your pocket, you could go to the other side of Europe, but the issue is, okay, how do I get cash? Nowadays, this translates into getting and sell Bitcoin. Let's keep the discussion around Bitcoin. Sell it and get cash in my bank. Because today, you cannot buy stuff with Bitcoin or you cannot buy it with, you know, gold.
There are some places you can buy stuff with Bitcoin. You can
We're talking about
houses.
going to the food store. No, you know, I'm talking
the basics.
So, exactly. So let's say if the money printing guys, the fiat money printing guys, will see too much danger in this crypto movement, the crypto assets, I don't exclude they will say we will prohibit it, but they cannot prohibit holding it. They can prohibit cashing out.
Yeah, the use of it. Yeah.
The cashing out is the issue, because if a centralized authority, let's maybe put this in a futuristic content of a state somewhere on this planet, it's disrupted because the inflation is high, the fiat currency in the state is like basically worthless. So what they will do is they would simply prohibit converting from crypto to fiat, and by doing that, they will keep control of the system. Yeah, and here's the real danger, because these are the scenarios that happened in the past. So when countries were endangered, they maybe simply prohibited, you know, holding gold to private people and stuff like this. Yeah, so these are very futuristic scenarios, but I think that's a kind of a danger for the crypto. Although we see this happening today. Yeah, if you think of stablecoins, this is one of the best innovations, and it's really paradoxical because there are people in certain states that trust more a company based in the British Virgin Islands with dubious people running it than they trust their own government.
Crazy.
Because these people don't invest in crypto to earn, you know, 10, 20%, whatever. They basically use their crypto apps and the stable coins as just not to lose money. And they trust private companies with all the proof of reserve questions that we spoke about. They trust more than they trust the central authority of their government and the central banks that just keep printing money.
Interesting. You said you are a very diverse investor. You have real estate, these kind of things, ETFs. But you also say that Bitcoin will probably surpass gold. Do you own gold? If so, how much related to Bitcoin?
Let me explain why not gold. So maybe it's easiest to explain comparing gold and Bitcoin. If we just compare the effect of Bitcoin in a 60-40 portfolio, if you add Bitcoin compared to what happens if you add gold. Yeah. So and the gold stuff is also has to be divided into owning physical gold compared to only financialized gold. Because in theory you could go to economy and just invest in something that's related to gold and maybe it could be done, or you can do this on a DeFi platform. But if an investor has 60% shares and 40% bonds in portfolio, which is the traditional portfolio of, let's say, investor portfolio, if you add up to 2 to 4% of gold to it, or 2 to 4% of Bitcoin to it, what are the effects? So gold is usually a defensive play, which means if the stocks and the bonds will go down, gold will usually go up, and it will compensate the loss of returns of bonds and shares. While at a certain, of course, risk and volatility increase. But you keep that low so that the overall portfolio is more safe, protected, or less volatile. Bitcoin has a similar but different effect. So it basically has a higher upside potential, while at the same time, even if it would go to zero, you would only lose 2 or 4%. Yeah. So it's not that much a defensive play in not losing money, but it's simply the opportunity to maybe get higher returns while keeping the volatility levels of both gold or Bitcoin enhanced portfolios at the same. Yeah? Again, if you keep these percentages low. If you want to go more aggressive into crypto and invest higher percentages of your total investments into crypto, then the stories, of course, change very quickly because the volatility of crypto and Bitcoin is much higher. Yeah. So this is why I combine at the moment mostly real estate and crypto, and not that much shares, bonds, and ETFs and stuff like that.
Interesting.
Very interesting.
Yeah. Any last questions here?
Are there any alts? You have to give us some altcoins, please, Peter.
Altcoins.
Tell us what to do. No, I'm just kidding. Do you have any particular altcoins? You were talking about Bitcoin, Ethereum. I don't know, you're not a guy that likes to call names and projects, but is there anything that you think, these guys are making something amazing?
I will still not give any names. Sorry for that. I have actually a coin.
Oh, you have it?
Yeah, I have a couple of. I mean, I use the app, our app, and I have most in strategies. I actually bought a coin like last year and made more than 100% on it. It was. I just bought it for fun, and it was like a couple of €100 that doubled. But I guess it's too late. Yeah, it's too late for that. The increase of value already happened, so better not to get.
Only 100%? Isn't there more growth potential?
Actually, it was 248, I think, yesterday or stuff. So I have to sell it.
Yeah,
if I treat myself, I have to sell it. Yeah.
And what are you going to buy? That's what I wanted to know. Nothing particular?
No, I'm more of an index geek. Look, my job is very demanding. I don't have time to follow the coins, so I just go on the platform, select a couple of strategies that I believe are well thought of and how they work, and keep my money in there.
Okay, then I have one last question. Will Economy ever launch its own token?
No, we had a token. We killed the token.
Okay.
And we are good without the token.
Why? Is it more regulatory issues or stuff like that?
Yeah, I mean, it's related one side to the regulation, but the reason why is actually, I don't believe we are able to scale the token to become a big global asset or a big global thing. And it's really a dangerous place out there. When we had the token, we saw how other players, not us, manipulated with the price of our own token. Yeah, we were talking about the low liquidity.
That's what they do.
Yeah, and that's what they do. And we don't want to become, let's say, a token that actually it's manipulated and then to scam people. So that's why we said, no, we don't need a token.
Interesting. One final question. What do you think is more the case? Will people go from gold to Bitcoin, or do you think Bitcoin will just simply outperform the market cap at some point?
What do you mean go? So that they will sell gold?
So right now both are kind of at all-time highs, right? Gold is going through the roof. Bitcoin is pretty much going through the roof. So both are increasing in market cap. you say Bitcoin will most likely at
You
some
always
point...
measure market cap in fiat. That's why they're both increasing.
Correct.
Coming
True.
back to the...
Correct.
So, as long as they will be printing money, fiat, then it's going to go up.
Everything will go up. Yeah.
Will they print?
I think they are all the time. Now we're talking, I guess they printed a couple of billions just during this conversation.
They used to call it quantitative easing. What's the new name for it?
I don't know.
They just
You
print.
name it.
They just print. We're printing, boys. Is the printer on?
Okay.
Overtime.
I think that's it for today. Thank you so much, Peter, for your time, for your explanation of the platform. Actually triggered me to create an account.
I will definitely
Yep.
look into it and create an account.
Yeah,
If
it was a
it
pleasure.
maybe today.
Yeah. Maybe we'll have a strategy soon. Anyways, if you have any questions, comment, like the video.
Like iets, comment iets. Ja, dat helpt het kanaal natuurlijk. Meer toffe gasten zoals Pieter kunnen uitnodigen. En je weet, stay aggressive. Want mensen, ik hoor dat mensen negatief praten over de prijs van Bitcoin. Even wat kort daarover.
Toch, guys, volgende week hebben we 2 crypto gasten weer. Dus 2 crypto investeerders. Heel erg bekend in de game. Dus dan gaan we het weer hebben over marktomstandigheden. En ja, een van de dingen die ook aan bod komt is natuurlijk... Iedereen zegt Bitcoin is 150k top. We gaan nu weer recessie in, weet ik het wat. Je hoort de gekste berichten voorbij komen. Of dat het maar doorgaat tot maart, april. We willen weten wat hun meningen zijn. En gaan we verklappen wie het zijn?
Ja, ik kan wel.
Kan?
Ik weet niet eens wie het zijn.
We hebben Raoul Essenboom van Crypto Takkies en Ryan Babel, de bekende voetballer. Dus stay tuned, like de video.
En we zien jullie de volgende keer. Stay safe, maar ook aggressive tegelijkertijd.
Ja, doe iets.
Peace out. Ciao. Amazing. Thank you.
No, it's a pleasure.
Very nice one. Very nice one.
Peter. Was a pleasure.